In the days leading up to Russia invading Ukraine, stocks were reacting.
The stock market hates uncertainty. So all this uncertainty, will they or won't they, was removed when they actually went in.
Times are concerning, but senior analyst Tony Sagami points to this chart tracking how the markets generally fare long-term during geopolitical strife.
Not to underestimate or downplay the human tragedy, it does show how geopolitical events really don't have that much influence on the stock market.
And he says to look at the recently released GDP numbers, gross domestic product.
The GDP numbers came in for the fourth quarter at 7% growth. 7%, that's a monster GDP number.
The GDP is considered a scorecard for a country's economic health.
The thing to remember is that the U.S. is nowhere near going into recession. Unemployment's at lows, incomes are going up. Things are good. And the stock market at its roots is a reflection of the economy, and the economy is doing very well.
And that's despite rising inflation. Guess how much this Bloody Mary cost? It's a photo Tony's friend sent him from an airport.
It really looks delicious, but if you look in the right-hand corner, you'll see the price.
$34.
$34 for one single Bloody Mary. That's ridiculous, but that's how much prices are going up.
In general, higher prices are not holding consumers back.
Remember, we're a consumer-based economy. 70% of GDP is consumer spending. So the real question you have to ask, are Americans still spending money? Take a look at this chart of retail sales month by month. Are we still spending money? Darn right we are. Look, we're at all-time high, and that strong sales translates into higher profits and bigger revenues for a very small select group of companies.
Companies Tony holds in the portfolios of Disruptors and Dominators and Weiss Ultimate Portfolio.
One of the big winners is Amazon. They're reporting gigantic sales revenues. If something goes up, people are still buying it, and Amazon gets a little bit more money each time they sell something. Same is true at Walmart, also at Costco. Let's say your profit margin stays the same. Say you're making 10%. Well, 10% on $200 is better than 10% on 100. So they're making more revenues and higher profits. One of the biggest hidden winners, I think, is MasterCard and Visa, because every time you charge, they get a little piece of the action. They get a little VIG, kind of like a bookie. And their VIG is going up along with those higher prices.
Higher car prices are also hard to ignore.
Take a look at new car prices. They're up by 12% on a year-over-year basis. That's quite a bit. But it's even more shocking for used cars. Used cars are up almost 30%.
You've written about how auto parts companies remain a great investment.
The auto parts business is very steady, very recession resistant, and doing especially well now with these higher car prices, because that combination of new car shortages and used car rising, skyrocketing prices, and the age of the U.S. cars on the road is a bonanza for people that are making auto parts.
And there are clear winners.
There's 4 publicly traded auto part producers. O'Reilly is my favorite because it's the one showing the strongest growth. It has the best Weiss safety rating and the best Weiss performance rating.
There are stocks across sectors benefiting from higher prices. Right now, Tony sees a bull market intact.
That doesn't mean there's not going to be painful corrections like we've seen. Those are normal corrections, and this is not the time to run for the hills. Don't run, buy.
Knowing what to buy is his bread and butter.
Senior analyst Tony Sagami, always a pleasure to speak with you. Thank you so much for making time for me today.
Good. Let's do it again.